Hello, 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 and a massive hello to everybody. Hope everybody's having a great weekend wherever you may be, whatever you may be doing. This is 50 Pips rocking and rolling here on the 22nd of January 2017. No trade calls, no recommendations. We're responsible for their own stuff, and we're here just for educational purpose only. So what's happening? Well, I was debating about what to do this whether to do this update or not, because not an awful lot has changed, right? So we went from what was going to happen with the election, what was going to happen into the inauguration, and now what's going to happen in the first 100 days, right? Effectively, I think the only key thing is that the markets have made some moves. Some will argue they're parabolic, some won't, but made some aggressive moves pricing in what's going to come with Trump, right? I think the base case is that anybody would have a hard time arguing with is that unless the administration delivers, these moves are going to get unwound, right? And the other point, which I think is going to be very hard for anybody to argue with, is that if you look at, the kind of fear in the market or the way the market is trading, it seems to be very much at odds with what we would expect to see with the presidency and with Trump continuing to hit Twitter a couple of times a day, right? So we have to be ready for some moves. We have to be ready for some kind of volatility. I think the year is still very, very young. There's still a lot of things, as we discussed in the previous updates, that have to play out. So I don't think it's the time to be stubborn yet. I mean, if you want to be stubborn, there's likely going to be times to be stubborn this year, but I think it's probably the wise decision is to try and stay very, very nimble, sized small, right? And let things play out. So in terms of the moves, what's happening here? So we've had this. If you're looking at the Russell, we talked about the fact that here into those highs, as far as we're concerned, the risk reward is to the downside. First little healthy move is played out. We've moved back into the 50, right? And here we'll have to see what's going to happen with the 100 and the 200 coming into play here. I think the way we'd look at this is any rally here is still in play for this healthy correction to play back down and move back into the breakout zone. And that's what we would prefer to see, and that's what we're playing for. And it's fairly, it's the same thing playing across the board. It's the same thing if you're looking at the Dow. Actually, at the Dow we have it on the futures, right? It's the same thing about that risk reward playing out. As far as we're concerned, as we said, we're going to stay fairly small, and we don't mind continuing to play for the downside. We'd look at the very least, we'd look for a move back down into the 50, but we'd like to see a bigger, healthier correction, even if that means a little bit up this week, back down into these levels. And I think everything's shaping up for that possible correction if you're looking at what's going on and the fact that things could get a little bit hairy if you see what happened over the weekend, if you see the initial policy things that are coming out of the administration. And that's where I think a lot of people are having a little bit of trouble here, is because if you look at the charts are still looking fairly bid. But if you look at, the climate, the tensions that are building up, it's looking like things could get a little bit nervous, right? And same thing if you look at TLT on the bonds, right? We got this nice little move. We had this basing, and we're looking for this to break up and correct. You see what's happened. We've had this first correction, and now it's basing. This eyeballing it looks like it's at a 50 back, right, of this move from lows to highs. Let's try and draw it in. Lows to highs. There you go, right? We've come right back into the 50 back. So how are we going to trade around this 50 DMA? If early in the week we hold heavy, then there's no reason why we can't see a move back into the 118. If we can stabilize above, then we'd expect this to continue to try and take out these highs, and in terms of TLT, to try and move back into the 124, 126, 27 area, but at least to see a nicer, healthier correction coming into play here. If you look at gold, again, playing out quite nicely. We discussed the fact that we're at a key injection point on on gold, right? Because we came back, we remember last year we said we'd be more than happy going over off on the holidays over the year long gold, looking for this to correct higher. And here it's desperately looking for direction. But the way this is trading, the more it holds bid here, the more we'd be partial to looking for this to correct a little bit more for these two moving averages to track, and that would be in line with the fact that equities need to correct a little bit, right? USO, it's going to be interesting to see how the market trades, how the market opens, but it looks like is also, if you look at positioning, everybody is long and strong here looking for this has to pop higher. We'd be very cautious here, especially if you start to see this level give way. We would not be surprised to see a much bigger correction here. Right now, an awful lot of wheeling and dealing around these zones. Euro, corrections in play. I think if you look at it on the daily or the weekly, it's pretty much the same thing. We're looking for this healthy correction here, and now you've got this spike high, which is going to be the first defense point. I mean, if we make it all the way anywhere into this, 110.50s, 109s, this is still going to be a sell zone for the shorts to try and come in and keep on pressing lower. But right now, there's still a lot to room to go, and this looks like it's trying to correct. So as far as I'm concerned, I think this is not cheap enough to buy. It's not expensive enough to sell yet, and it looks like there should be a little bit more dollar weakness. That'll come across all the charts, and that maybe means a move back into here, and then we'll see what happens, right? If we come back into there, and then and we still keep on getting the same messages, Trump causing a little bit of havoc, equity selling off, talking about the fact that they're concerned about the strong dollar, then there's no reason why this couldn't accelerate much higher and try and move back into this higher range. But for now, the way we're looking at this is the healthy retracement is back into that area, and that's going to be the bull-bear line going into the week, right? And you see it's the same thing across the board. I mean, if you look at Aussie, it's particularly interesting because you see how it's trying to rotate here, and I think all the bears are struggling a little bit with this, saying, how is this possible? How is this possible? Are the tables turning? We'll have to wait and see. There's an awful lot of resistance coming here, but it's a similar one to Euro, is that I don't think it's expensive enough to sell and definitely not cheap enough to buy here. So I think when you get into these situations on the charts where stuff is kind of hovering, you can make a case for either direction, and the climate is a little bit nervous or tense. It means you can get awful lot of velocity inside these ranges, because essentially the guys or gals who want to be long are already long, right? In terms of bigger players, bigger players, we're not talking about small retail, but the bigger guys want to be long, they're already long, right? The guys who want to be short, they've probably already started getting short, or they're still holding some kind of short. So what it means is just that there's a lot of likely air pockets inside the zone. So it doesn't mean you can't make money, and it doesn't mean that there'll be short-term players, intraday players. But in terms of the bigger levels, these are the ones that really matter. So it's a classical situation that as long as we continue to trade here, every single weekly update, there's going to be absolutely nothing to talk about, right? That's what makes the weekly updates a little bit tricky in this kind of scenario. What we talked about CAD the other day, actually we have it on another chart on another feed, but what we said is, probably the clearest trade the other day was to get long CAD. The way things were shaping, the headlines, you could not get long CAD here as it was basing. It was a nice little move. So here, especially if you look at it on the weekly, the chop range, and we'll have to see what resolves on the dollar, is 136, 133, 130. So we'll have to see here. Again, not cheap enough to buy, not expensive enough to sell, but especially as long as we get some traction here above these 133s, don't be surprised seeing this trying to move all the way back to the top side of this range. But you see how neutral we are here, so there's not an awful lot of edge, right? Yes, a lot of wheeling and dealing. As we said, NASDAQ is being the strongest, but it's starting to look heavier and heavier, right? It's starting to look heavier and heavier. Still prefer the Dow in terms of shorts, but the NASDAQ is starting to look heavier and heavier, and it's the one that's run up the most here recently. So eyes on this, especially if we start to come back down and we start to break all this area, we could get a very quick move back into bigger levels. YM is still the weakest and our favorite play here, YM or IWM. right? The Russell, and you see it's looking heavier and heavier and heavier. So this is in play. And again, we thought, like all the other ones, the risk reward is really very interesting coming into end of last year, coming into the beginning of this year. Gold, oh, we looked at that again. You know, we looked at that before. Same, if you look at CL, right? It's just, we don't see why this should trade that much higher or that much lower, right? It's just in a bigger chop range, as we've discussed a lot. So as long as we hold here, it'll likely hold a bid tone, but be very, very careful. If intraday we start to clip these levels, we start to take these levels, we wouldn't be surprised to see this back in the 144s. Put it this way, we think there's a lot more room for this to come back to the downside than there is to the upside, as it'll start to get an awful lot more of overhead support coming into play. Financials, again, we think this is an interesting short, nice opportunity to be tactical last week. You know, even if you look at this failure here, you know, got a nice quick little move right back down into the 50. So here, this is going to be a bull bear line. We'll have to wait and see. DXY, remember we said at the beginning of the year we'd expect 100 to print before, when we're trading up here, we'd expect 100 to print before 105. So that move's pretty much done. We'll have to see how this continues. But again, you know, I wish we could be, we could look at this and talk about a lot more. Essentially, nothing has happened, right? And I think that's the focus, is summarizing. We're at key levels. Can the market remain irrational longer than it can stay solvent? Then you can stay solvent? Sure. The market is pricing in a lot of things the administration has to deliver on. Now, if the administration really delivers, is everything priced in? Probably not, right? Probably not. So if they start to deliver, there's clearly a lot more room for this to move higher. But I think as we see things hitting the wires, you know, the marches over the weekend, Trump not releasing his tax returns, what he's talking about in terms of NATO, TPP, etc. You know, all these things, people are starting to get more and more nervous. So all things being equal, we still feel that the healthier move would be to see a retracement, even if we're going to end up higher, right? And we feel that sooner or later, market participants, again, because they're not in a beauty contest, people who are managing real money, right? There comes a point where you have to, you know, look reality in the eyes and play a little bit more conservatively, right? And that's all we're talking about. So again, let's see what happens. I wish the update could be a lot more interesting. We would talk about a lot more, but just not that much is happening, right? So as always, thank you so much for tweeting out, for retweeting, for liking. It's always very much appreciated. If you have any chart I haven't looked at or anything, just hit me up. Reminder, probably the best thing to do is like over the weekend, you know, if you're looking at charts and you see something, you have a question on a chart, just send me a message through the comment section on the blog, you know, Saturday, early Sunday, and just say, hey, 50, can you look at this? What do you think of this? And if it's something which is relevant that most people could benefit from, unless it's something completely obscure. I mean, if it's something obscure, I'll just answer you by email. But it's if something that more people could benefit from, I'll answer it in one of the videos, okay? So again, have an awesome one. I hope everybody has an awesome week, and I'll see you around on Twitter. Take care. Bye-bye, guys.